Hey everyone, welcome back to Corporate Decoder, the place where we uncover the dirty laundry hidden in plain sight within corporate filings. And oh boy, do we have a juicy one today that involves real estate, essential income, and shares galore. Remember to hit that subscribe button and join our Discord community. The link is in the description below for even more exclusive content and discussions. Let's dive right into this report from ExchangeRight Income Fund. It is basically a quarterly checkup detailing how the company is doing and what is coming next. The main update here is about their net asset value, or NAV as the finance folks call it. Think of NAV as the real worth of the company's properties and assets, minus any debts. So on the 30th of September 2025, the company declared its net asset value to be a whopping $711,365,000. That sounds like a lot, and it is, but remember this is for the whole company. What really matters for investors like you and me is the value per share. They've stated is $27.30. Per share for several different classes of their shares and also for their operating partnership units. This NAV is calculated based on an independent valuation of their properties, plus their cash and minus their debts. They update this value every quarter and you can find it on their website. Let's look at where this value comes from. A massive chunk of it, $1,327,000,000, is tied up in their investments in real estate, that is their core business, owning properties. Then they have some notes receivable from affiliates, which is basically money owed to them by related companies, totaling over $43 million. They also have over $18 million in cash and cash equivalents, plus some restricted cash too. On the flip side, they have significant liabilities, most notably mortgage loans payable to the tune of $538 million, and a revolving credit facility of about $132 million. After everything is added and subtracted, we get that $711 million NAV. It is important to break down how many shares are actually in play. They have shares across different classes like Class I, Class D, and some E versions of these. As of the 30th of September 2025, there were over 26 million total common shares and operating partnership units outstanding. The NAV per share, as we mentioned, is $27.30. Now, let's talk about how they are raising money. They are conducting a private placement offering, meaning they are selling shares directly to investors, aiming to raise up to $2.165 billion. They've updated the purchase price for these shares to be equal to the net asset value per share as of the 30th of September, plus any selling commissions and expenses. This adjusted price is effective for subscriptions closing from the 1st of November 2025. For example, the purchase price for Class A shares is set at $29.03 with a net current yield of 5.99%. Other classes have different prices and yields. It is interesting to see how they are pricing these shares, linking them directly to the underlying value of the company. So far, they've issued a little over 18.6 million shares in this private offering, bringing in about $509 million. This means they still have a substantial amount left to raise to reach their $2.165 billion target. They plan to keep selling shares monthly. Moving on to dividends, which is often what investors look forward to. For September 2025, they declared a dividend of 14.49 cents per share for all outstanding common shares. These dividends were paid out or reinvested on the 15th of October. A portion of these dividends, about 11.35%, was reinvested back into the company's common shares through their dividend reinvestment and direct share purchase plan, or DRIP. This means some shareholders chose to put their dividend income back into buying more stock. For Class A shares specifically, the table shows 159,064 shares were issued through reinvestment, totaling $4.286 million. Combined with Class I shares, nearly 321,500 shares were issued through this reinvestment program. Representing over $8.6 million, this DRIP allows shareholders to automatically increase their holdings. Now, like most companies, they include a section on forward-looking statements. This is basically a disclaimer. They're making educated guesses about the future, but they warn that actual results could be very different due to various risks. They're talking about risks in the real estate business like tenant defaults, economic conditions, and changes in government policies. They list out potential issues that could impact their business, such as tenant defaults, the difficulty in quickly selling real estate, environmental liabilities, and even natural disasters. They also mention general economic conditions, foreign trade measures, and uncertainties in the financial markets, including interest rates. They are also concerned about their ability to renew leases, fill vacant spaces, and execute their acquisition strategies. It is a standard list of potential headwinds for a real estate investment company. Finally, the filing includes exhibits which are supporting documents. The most important one here is the cover page in an interactive data file format, making it easier for systems to read and process this information. So, what is the story here? ExchangeRight Income Fund is continuing its operations focused on generating income from its real estate portfolio. The NAV calculation seems standard, reflecting the market value of their assets less liabilities. They are actively raising capital through a private placement, and the purchase price for new shares is directly tied to their calculated NAV, which is a pretty direct way to value the offering. The dividend of around 14.5 cents per share is a key return for investors, and the DRIP program shows a decent level of reinvestment, indicating confidence from some shareholders in the company's future. However, like any investment, there are risks. The company heavily relies on its real estate investments, and a downturn in the property market or issues with tenants could significantly impact their performance. Their substantial debt, particularly their mortgage loans, also presents a risk, especially if interest rates rise or if they struggle to generate enough cash flow to service the debt. The company's limited operating history as a REIT is also mentioned as a potential concern for its ability to make consistent distributions. Looking at the numbers, it is clear they manage a large portfolio with significant debt. The strategy seems to be to grow the NAV through property investments and raise capital to fund this growth. The current share price is directly linked to their NAV, which provides some transparency, but also means the value can fluctuate with property valuations. Overall, ExchangeRight Income Fund provides a regular income stream and aims for capital appreciation through its real estate assets. Investors should carefully consider the risks associated with real estate, leverage, and the current economic environment before investing. The company appears to be executing its strategy, but the success of its investments and its ability to manage its debt will be key determinants of its future performance. Alright, that is our breakdown of ExchangeRight Income Fund's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more in-depth discussions and community engagement. Thanks for watching. See you next time.